All right, today we're going to dig into an analysis that's sounding a pretty serious alarm. It's about something called the 2026 Stagflation Trap. And if you have a mortgage or really any savings, this is a stark warning. So let's jump right into what this source claims is just around the corner.
The analysis we're looking at doesn't waste any time. It opens with this incredibly bold claim. If you've been sitting on the sidelines waiting for mortgage rates to drop so you can finally buy a home, well, you just got hit with the worst news of the year. That's the high-stakes premise we're about to unpack. So what even is this threat? The source gives it a name, the Stagflation Trap. We're going to look at exactly what that means, according to them, and more importantly, why they argue this is the absolute crucial moment to be paying attention.
So here's the core idea. This isn't just about high prices or a slow economy on their own. No, the source says the real trap is when you get both at the exact same time. It's a nightmare scenario because it basically ties the hands of the Federal Reserve. They're left with no good options, totally paralyzed.
So why the sudden alarm bells? Well, this source points to what it calls a perfect storm of data. You've got inflation that's just stubbornly stuck above that 3% mark. At the same time, the job market is weakening, maybe even faster than anyone expected. And because of that, the Fed had to slam the brakes on those rate cuts everyone was banking on, which puts that whole idea of a soft landing in some serious jeopardy. Now let's pivot to the first major danger zone this analysis identifies. And it's a big one, the housing market. The argument here is that it doesn't matter if you're trying to buy right now or if you're planning to wait. Either way, you could be facing some pretty significant risks.
And this right here really captures the gridlock we're in. The analysis says that even with some minor rate changes, the fundamental problem, affordability, is still here. Buyers are priced out, and homeowners who locked in those super low rates, they have zero incentive to sell. So the market is just frozen. It's a complete standoff.
So here's where it gets interesting. The source points to something it claims most people are totally missing. It's not just about interest rates. They argue that new trade policies are creating something called a tariff pass-through, and it's causing the cost of building materials to spike. So what does that mean? It means all that new housing we desperately need to fix the supply crisis, it's just not coming.
And that brings us to probably the most dramatic warning in the entire analysis. And I'm quoting it directly here. If you wait, you might get locked out forever. The argument is basically that if new houses never get built to meet the demand, waiting for prices to magically drop could backfire big time. It's a pretty bleak outlook for sure.
Okay, so after laying out all that doom and gloom, the analysis does shift gears and talks about a potential solution. It lays out what it calls the smart money strategy, a kind of safe haven designed to protect your finances from this exact scenario.
And this strategy really boils down to 3 simple steps. First, move to safety. That means shifting funds into short-term treasuries while the Fed's hands are tied. Second, you rotate for growth. Find opportunities by investing a portion in very specific assets, like energy commodities. And third, and this might be the most critical step of all, you build a massive financial buffer.
And this is that buffer. The source is incredibly blunt about this point. It says you need to have 6 months of liquidity right now. It's not framed as a suggestion. It's presented as an absolute must, something you do to avoid becoming a target in what they see as a very volatile economy.
Okay, so what happens now? The analysis doesn't just leave us hanging with the strategy. It points to one single upcoming event that it claims is going to be a make-or-break moment for the entire U.S. economy.
This timeline really shows how we got to this point. After last year's rate cuts, it felt like a soft landing was possible. But then, disappointing data on both inflation and jobs forced the Fed to hit pause. So now, according to this source, every single eye in the financial world is on the upcoming Federal Open Market Committee meeting in May. That's being called the moment the next big shoe is going to drop.
And so, this whole analysis leaves us with one final, very direct question. Is your strategy ready for the next move? It's really a challenge, prompting you to think about whether you're actually prepared for the kind of volatility this source claims is coming. It's a provocative thought, to say the least, based on one very clear perspective on where we're all headed.